Welcome to the Deep Dive. Today we're taking a close look at Compugen Ltd, that's CGEN on the ticker, and their Q2 2025 earnings call from August 6th.
Yeah, it was a pre-market call, and the headline numbers, well, they looked a bit rough on the surface.
Definitely. But our job today is to kind of cut through that initial noise, the jargon, and really figure out the strategic story here for Compugen. They are a clinical stage immunotherapy company after all.
Exactly. It's less about the cents per share right now and more about the tactical updates, the pipeline progress. We need to see what leadership is really focused on, especially with some key catalysts coming up this fall.
Okay, so let's start with those headline numbers, the ones that hit the wire first. Because, yeah, on a GAAP basis, it wasn't pretty.
No, it wasn't. They reported a net loss of 0.08 cents per share. The consensus was looking for a loss of about $0.07, so a slight miss there.
Yeah, the revenue figure was the bigger story, wasn't it?
It really was. Only $1.3 million recognized. That's way down from $6.7 million the year before. And the consensus proxy was around $5.4 million. So a significant miss.
Ouch. In most sectors, numbers like that would send the stock tumbling.
Right. But here's where it gets interesting. The market reaction, well, there wasn't much of one. CGEN shares actually closed flat on the day, right around $1.46.
That? After those numbers.
Flat. And that non-reaction is really the first big clue for investors, I think. It signals that the market sees these financial figures, which, can bounce around a lot based on collaboration revenue timing, as basically expected bad news, nothing incrementally negative.
So the market's already priced in that kind of variability. They're focused elsewhere.
It seems so. The focus appears to be much more on the strategic execution, the pipeline, rather than these near-term GAAP results.
Okay, but hold on. If the market is rewarding, let's say, stability or the bigger picture, why has the stock been lagging so much? Year to date, CGEN is down, nearly 19%, while the XBI, the biotech index, is actually up over 15% in the last 3 months alone.
Ah, that's the key tension, isn't it? You're right. The stock has been trading down. Why? Because investors are fundamentally waiting for clinical data, hard proof, not just, promises or platform potential.
So the weak financials didn't hurt more, but the lack of recent positive data already had.
Exactly. But the fact that the financial miss didn't cause a further sell-off tells you the market acknowledges the importance of their financial stability. It's a risk mitigant. Let's dig into that financial discipline.
All right, let's unpack the OpEx and the balance sheet. How are they managing the cash burn?
Pretty well, actually. Management kept a tight rein on spending. R&D expenses, for example, actually went down year over year, $5.6 million compared to $6.2 million.
And G&A?
G&A was flat at $2.2 million, so the total net loss landed at $7.3 million for the quarter. But the key point is they weren't just burning through cash recklessly while waiting for these clinical milestones to hit.
And the cash position itself, that's the safety net.
It absolutely is. They've got a solid $93.9 million in cash, cash equivalents, and marketable securities, and importantly, zero debt.
Zero debt is nice.
Very nice for a company this size. And crucially, management confirmed on the call that this cash runway extends comfortably into 2027.
And to 2027, that's significant.
Hugely significant. For you, the listener, knowing a small cap biotech can likely fund itself through key phase 2 readouts without needing to dilute shareholders immediately. That's a major de-risking factor in this kind of volatile market.
Okay, so financially stable. The call also highlighted a big change at the top, didn't it? A leadership transition.
Yes, a strategic one. The current CEO, Anat Cohen-Dayag, who's been there a long time, is moving into a newly created role. Executive chair, she'll be focusing more on high-level corporate strategy, partnerships, that sort of thing.
And who's taking the CEO spot?
The current chief scientific officer, Aaron Ophir. He'll become president and CEO after the annual general meeting in September.
CSO to CEO. What does that signal?
It signals a clear pivot, I think. You have the founder stepping back slightly from the day-to-day to focus on the big picture, the long-term deals. And you're putting the science lead directly in charge of operations.
So the message is execution, science, clinical trials.
Precisely. It feels like they're setting the stage, building the foundation for the next crucial phase, which is all about getting these drugs through trials. Less discovery, more development, execution.
All right, let's shift gears then to that pipeline, because ultimately that's where the value is, right? They talk about a pipeline-first strategy, but it all seems to stem from their tech platform. Tell us about Unigen.
Right. The Unigen platform is absolutely central. It's their proprietary AML computational engine. But it's not just, generic AI. It's specifically designed to use complex bioinformatics to uncover novel cancer targets.
The targets that others might miss.
Exactly. Often targets in really complex biological pathways, things that are maybe harder to drug or understand initially, things big pharma might have overlooked.
And they have a particular focus area for this platform.
They do. A lot of their work centers on the DNM1 axis. You can think of this as a complex network of signals that control immune cells, particularly T cells and NK cells. Unigen helped them map out the key players there.
And that led to their drugs?
It led directly to the discovery of both their internal lead asset and the assets they've partnered out.
Okay, let's talk about that internal asset first. COM701. It's a PVR-RIG inhibitor. For listeners maybe not deep in oncology, what does that mean? What's PVR-RIG?
So PVR-RIG is another immune checkpoint, like PD-1 or TIGIT, which people might be more familiar with. Think of it as a natural brake on your immune system, specifically on T cells. Cancer can use these brakes to hide.
And COM701?
COM701 is designed to block PVR-RIG, to essentially release that brake. The goal is to let the T cells wake up and recognize and attack the cancer, especially in patients where other therapies haven't worked.
And that's now in a key trial, the MAIA-ovarian trial.
Correct. MAIA-ovarian. It's an adaptive platform trial looking at COM701 as maintenance therapy in patients with platinum-sensitive ovarian cancer. They confirmed on the call that the first patient has been dosed.
Maintenance therapy. So trying to keep the cancer from coming back after initial treatment.
Exactly. And they're targeting a specific group with high unmet need.
And they have a pretty clear goal for this trial.
Very defined. The primary aim is to show a clinically meaningful improvement in progression-free survival, or PFS. Specifically, they're shooting for a 3-month improvement compared to the placebo arm.
And the patient population is quite specific too, right? Not all ovarian cancer patients.
No, definitely not. They're focusing on patients in the second or third line of treatment who aren't candidates for the standard options like PRP inhibitors or bevacizumab, drugs like Avastin.
So if you know those drugs, you know this is a tough-to-treat population.
Absolutely, a very challenging group. By targeting this specific niche, which they estimate is about 8,000 to 12,000 patients initially, they increase their chances of seeing a clear positive signal if COM701 works in that setting. It's a focused approach.
Now, the main results from MAA, that interim analysis, that's still a ways off, right? H2 2026?
Yeah, quite a way off. Second half of 2026 is the timeline for that key internal readout.
But there is some relevant data coming much sooner. At ESMO this year.
Yes, exactly. The European Society for Medical Oncology meeting in October, that's the immediate focus. Compugen is presenting a pooled analysis from their earlier phase 1 trials of COM701.
What will that show?
It'll cover COM701 both as a monotherapy and in combination, specifically in heavily pretreated patients with platinum-resistant ovarian cancer, so an even tougher group than the MAI trial. This data is essentially the clinical backstory, the rationale supporting the design of the ongoing MAIA maintenance study.
Got it. So ESMO provides the why for MAIA. But while COM701 is the internal flagship, you could argue the biggest near-term factor for the stock involves their partnerships, right? Especially AstraZeneca.
Without a doubt. This is where the potential scale just explodes financially. We're talking about AstraZeneca's drug rilvegostomig. It's a bispecific antibody targeting both PD-1 and TIGIT.
And the Compugen connection.
The crucial part for CGN is that the TIGIT targeting arm of rilvegostomig comes directly from Compugen's own discovery pipeline. It's derived from their asset, COM902, which again came straight out of that Unigen platform.
And AstraZeneca is really going big on this drug.
Staggeringly big. AZ has already initiated its 10th phase 3 trial for rilvegostomig. They are positioning this thing as potentially a new foundational backbone for immuno-oncology treatment across many different cancer types.
Wow. 10 phase 3 trials, and the potential financial implications for Compugen.
Huge. AZ is projecting non-risk adjusted peak sales for rilvegostomig of over $5 billion.
$5 billion.
Yep. And Compugen stands to get mid-single-digit royalties on any actual sales. Plus, there's still up to $170 million in potential regulatory and commercial milestone payments left on the table from that deal.
Okay. Now, management mentioned something specific on the call about the format of rilvegostomig. FC inactive. Why does that matter?
Right, the FC inactive format. It's a bit technical, but it's actually quite important in the TIGIT space right now.
Yeah.
There have been some mixed results from other TIGIT drugs in trials recently.
Okay.
So the FC part refers to the tail end of the antibody, the fragment crystallizable region. This part can sometimes trigger unwanted immune responses. Rilvegostomig is Fc inactive, meaning it lacks this potentially problematic tail.
And the potential benefit of that.
The thinking is it might offer a safety advantage. Fewer off-target immune effects could mean patients tolerate the drug better, stay on treatment longer, potentially leading to better overall efficacy. It's a potential differentiator.
Makes sense. And we shouldn't forget the other major partnership with Gilead.
Definitely not. Gilead has GS-0321, which used to be Compugen's COM503. It's an anti-IL-18 binding protein antibody. That program is moving along as planned in phase 1.
And the significance there.
Again, it's external validation. It shows that Compugen's Unigen platform isn't just a one-hit wonder. It's identifying targets that major pharmaceutical companies see value in and are willing to invest significant resources, hundreds of millions, to develop.
Okay, so let's recap. Strong balance sheet, cash into 2027, disciplined spending, a strategic leadership shift focused on execution, an internal asset moving forward, and crucially, these high-potential partnered assets with major catalysts coming soon, especially at ESMO. Given all that, back to the earlier question, why the stock lag? Why down nearly 19% year to date?
It really underscores where investor focus is right now. The underperformance tells us the market is currently assigning very little value to the potential of the Unigen platform itself, or even the internal CMM701 asset, until they see external validation from these big partnerships.
So it's all about the partner data.
For the near term, absolutely. The biotech market is being incredibly selective right now. It's rewarding companies with clear, near-term, data-driven catalysts and the cash to reach them. Compugen now squarely fits that mold. It's become an event-driven story.
And that event is ESMO in October.
ESMO is everything for the near-term stock performance. The entire focus shifts there. We need to see the updates on rilvegostomig. Specifically, data in non-small cell lung cancer, and importantly, the first look at data in bladder cancer, where it's being combined with another drug, datopotamab deruxtecan.
So positive data from AZ at ESMO is key.
It's crucial. If AstraZeneca presents strong results, it does a few things. One, it helps validate the whole TIGIT therapeutic approach, which has seen some skepticism. Two, it validates Compugen's Unigen platform that discovered the COMM902 asset AZ is using. And three, it makes that potential $5 billion peak sales figure, and the resulting royalties and milestones for CGEN look much more tangible.
All right. That sets the stage perfectly for our next segment. It's time for the "This is not financial advice" trade pitch. Remember, everyone, this is purely a hypothetical hedge fund style idea for discussion. Absolutely not investment advice. Do your own research.
Okay, let's put on the analyst hat. Clears throat slightly, voice shifts. The thesis here is what we'll call the ESMO catalyst arbitrage.
Patchy.
The setup is clear. CGN stock has significantly lagged the biotech sector despite having that strong cash position and disciplined OPEX we talked about. The market is demonstrably ignoring the recent financial miss. This tells us there's a dislocation. The current valuation appears to be heavily discounting the potential value unlocked by positive partner data.
Okay, so there's a potential mispricing based on the upcoming catalyst.
Exactly. The market seems laser-focused on the risk, ignoring the potential reward just around the corner at ESMO.
So what's the trade?
The trade is straightforward. Initiate a short-term long position in CGN ahead of ESMO. This is a pure play, a bet specifically on a positive read-through from AstraZeneca's rilvegostomig data presentations in October.
Betting solely on AZ's success.
Solely. A favorable outcome does three things instantly. It validates TIGIT as a target, it validates Compugen's discovery platform, Unigen 902, and it brings that $170 million in milestones and those mid-single-digit royalties on a potential $5 billion drug firmly back into the market's focus. It's a bet on partner success, driving immediate re-rating.
And the exit strategy. This isn't a long-term hold based on this thesis?
Absolutely not. The exit is immediate profit-taking right after the ESMO data drops, assuming it's positive. Why? Because the next major internal catalyst for Compugen, that MAIA interim data for Common 701, is way out in the second half of 2026. Over a year away.
So the near-term event risk premium disappears post-ESMO.
Precisely. This trade is designed only to capture the value accretion from positive partner news at ESMO. Once that news is out, positive or negative, the specific catalyst we're trading is gone, we take the profit or loss and move on. It's a bet on AstraZeneca, not fundamentally on Compugen's internal pipeline timeline at this specific moment.
Got it. A very specific catalyst-driven trade idea. Okay, wrapping up our deep dive on Compugen's Q2 call. Key takeaways. Financials are stable. The cash runway is solid into 2027. Leadership is focused on execution, and the internal Common 701 trial is moving forward.
But the immediate fate of the stock, really seems tied almost entirely to the performance of AstraZeneca's rilvegostomig at the ESMO conference this October.
Which leads us to our final provocative thought for you, the listener.
Yeah, think about this. Right now, all the focus is understandably on the upcoming rilvegostomig data and whether it can become that massive $5 billion drug. But step back for a second. What if AstraZeneca is successful? What if their massive development plan does make rilvegostomig a new immuno-oncology backbone therapy?
What are the longer-term implications then?
What does that level of success validating a target discovered by Unigen mean for the entire platform? Could that ultimate validation of their discovery engine be the true, lasting multi-billion-dollar prize for Compugen? Perhaps even more significant than whether their own internal drug, TIGIT 701, succeeds or fails in its specific niche ovarian cancer market. Something to chew on.